Welcome to Live, Let, Thrive, a podcast about the Airbnb life, the share economy, and everything in between. Here are your hosts, Myka and Steve.
Hello, hello, hello.
And welcome back to another exciting episode
Of Live,
Let
Thrive. What's up, Myka, man?
I'm chilling, Stevie Stacks. How you doing, man?
I'm doing good. Ready to dive in this episode 315 of your favorite short-term, midterm, long-term rental podcast in the world, coming at you from Fort Worth and Arlington, Texas.
Let's go, man. So how's everything been? Oh, well, you already said what episode number this is. How's everything on your end?
My end, not bad, not bad. Happy Liberation Day, by the way.
Hold on. April 4th.
Trump's Liberation Day, the tariffs
Go into effect.
Yeah. So they hit yesterday. He announced the giant tariffs, and I'm sure everybody's talking about that.
Yeah.
And of course, we're gonna talk about it too, and put our own like kind of real estate Airbnb spin on it. You know what I'm saying? And because he kind of tanked the market, man. It's just plummeting, right? People's 401ks are vanishing. It's pretty crazy. So. You can mess with the people in a lot of areas, but once you hit their monies, they start getting mad, right?
Straight up.
So those hit, and that's a big deal going on. And I guess I was talking to a buddy of mine just today because this is the big news, and I had mentioned, okay, I don't know how things are going to shake out in the world of stocks and when that's going to bounce back. Because, like, say the biggest, I guess the biggest dive we've been through was 2008. 2008, 2009. Yeah. And everybody's like, okay, this has to be the bottom. This has to be the bottom. This is when I dive back in, But it lasted like over 2 years. It kept dropping for 2 years. So it was like, it seemed like no hope in sight kind of thing, is this the end? And so to say, okay, yeah, the market lost 1,600 points today, 1,600 points the next day. This has to be the bottom. You can't predict the bottom. It's impossible. You don't know what's going to happen. I mean, another war could break out. There's so many variables, right? And so you just got to keep investing and kind of keep doing what you're doing. And if you would have been buying houses and I bought one back then in 2009. So when it was at the bottom of the housing market, and that one's worth like quadruple what I paid for it. I think I bought it for around 80K. You know what I'm saying? So and I was able to pull 130K out of it. Yeah. Plus, have a crap ton of equity still in there, and with that money I pulled out of it, I was able to buy another house. The house with the pool I mentioned last week. So I'm using what do they call it? Using the same dollar to keep buying more and more houses, kind of thing. It's kind of like a BRRRR. That was like a longer BRRRR. But anyways, you can't predict what's going to happen. It's going to go up, going to go down, whatever's going to happen. But you can invest with some knowledge. And here's the knowledge. Making the longer story longer that I'm drawing out of it. If he's gonna put tariffs on everything, on steel, on lumber, on anything you need to make a house, right? Plus, he's trying to kick all the workers that you have for your home building company out of the country. It's just common sense saying it's gonna cost more to build new housing, right? There's already a shortage. Now it's gonna cost more to build new houses, which all these, the youngsters that get married, they want a brand new house and all that crap. That's just how it is nowadays. They don't want no starter home. They want to get the McMansion right away. But so what does that mean? If the prices of new houses are going to skyrocket due to these tariffs, then and kicking out the workforce that builds these houses, then that means the people are going to go to the secondary market. The used houses or previously owned houses, and what's going to happen there? That's going to be a skyrocket too because, supply and demand, right? So if you have a few rentals, you're sitting pretty because the price is about to go up. And if you can grab you a few more houses right now in this climate before people get hip to it, and there's a run on used houses, on older houses, then while the prices are still where they're at, right now, then I think you'll be sitting pretty in a few months I think in a few months because buying season's coming. So anyways, I ain't scared to buy no more. I think it's a good time if you get these prices. Now if the 3.2 in the hood jumps up to 400,000, I'm not gonna buy it. But if it stays around 200K, then okay, it's a good deal right now. You know what I'm saying? So So what are your thoughts on the matter?
Man, I agree with you. I think it's gonna, things are gonna skyrocket. But I think, like you said, that secondary market also gets real creative to me, right? So I look at it as, okay, you're putting tariffs on everything. Maybe that'll force people over here. Maybe we start cutting our own lumber and our own wood. You know what I'm saying? We start getting some stuff from inside of the country. I think the prices will go up a little bit, but as far as real estate, buy, buy, buy. We already had a housing shortage, right? So if you're buying right now, you can't lose. Now, the new build thing, 100% agree with you because, yeah, if those prices go up, I wouldn't really want to buy a new build. That's why I told you the 1031 I'm doing. It's a new build duplex that I'm trying to get. So I'm locking it in now because it's already structure and frames already done. I'm like, let me go ahead and get this thing now, lock it up, and see if I can get it under contract so we can go ahead and close on it. Because in like 4 or 5 months from now, I don't know if I want to be touching a new build. You know what I mean? Because those costs are going to go up. So I think it's going to be. And then I think on the last episode you made a really good point about, okay, the prices are going to go up. People aren't going to be traveling as much. So in the short-term, midterm rental space, you are going to have more people taking those staycations. So it's all about, man, what business you're in, know your business model, and keep pushing. You know what I mean? Because it's going to affect you in some type of way. You just have to know how to circumvent it. That's the beauty in business, right? Learning how to, being able to pivot.
Exactly. And an article I saw yesterday, it just jumped out at me, was in Bellingham, Washington. And they hit up these roofing companies that were hiring illegal workers, as they say, and they just rounded all their workers up and deported them. And I was like, God, dog, man, can you imagine? It already costs what, 15, 20 grand or more to replace a roof on a 2,000 square foot house. You know what I'm saying? If they get rid of all the, my fellow Mexicanos and get rid of all those workers that are the only ones that are going to want to be on a roof and when it's 110 degrees outside in the summertime, who's going to do that work? First of all, who's going to do that work? And they sure ain't going to do it for no $5 or $10 an hour. If you get Americans to get up there. So how much would that cost to replace a roof if they have to hire American workers that want $20 to $30 an hour for something like that, if they want to do it at all?
Man, I hate to say it, but American labor is expensive.
Yeah.
We run businesses, right? We have businesses and we know that American labor is expensive. Me and my coworker were just talking about this. I was like, man, hiring American labor is expensive. That's why the only thing we probably like outsourced is probably like our cleanings. But even at that, you can build a cleaning team of, Mexicanos, like you say, if you speak a little Espanol, you can build a cleaning team and cut costs there. But it's just expensive. So, yeah, man, I hate to say it, but it's just, I don't know what's going to happen. I'll say that. But American workforce labor is just expensive. It's all my VAs are out of the country. You know what I mean? So, it's just,
Shh, don't let Trump hear you say that, man. We hire American Trump. Don't get rid of our VAs, man.
I'm for real, bro. Like, we all, shoot, his business probably runs on some VAs too.
I know. And that's the thing I was thinking about the other day, right? We hire VAs, and of course you can pay them a lot less than you have to pay an American worker for doing the same thing. I would say 4 or 5 times less, right? At least.
Yeah.
For doing the same job, and a lot of them do it even better than the American ones do it. You know what I'm saying? Whatever. I'm an American worker. I'm throwing shade at myself. Whatever.
Me too. That's the truth.
Well, we grew up here. We didn't grow up hungry.
We feel entitled. That's what it is. You ain't hungry. They hungry.
So the changing landscape of a lot of the jobs, especially since we don't do as much manufacturing here in the United States as other countries, we do a lot of like service-based companies, right? And so, but when you realize with of course the advent of the internet and remote work and all that stuff, when you realize that it's going towards that and people can do the same work from their house, computer screen, you don't have to have an office space, you don't have to have all this stuff, you don't have to hire American workers to run your company. You could hire virtual assistants for a fraction of the cost. Yeah. So I understand them wanting to, tariff the hell out of the world, and so we can start building stuff here again. I don't know if that's going to work. Whatever. That's a different conversation. But as far as it stands right now, any of us can start a business and then fill it with virtual assistants because remote work.
Straight up, bro. And I mean, the times have just changed, man. It's changed. I mean, I think that's the vision, is to bring more stuff back over here. I hope it works. Um, I don't know if it will, but I hope it does. But yeah, man, I mean, the times have just changed, bro. Like most of the people we work, I mean, even Manu, he's remote work, right? And he ain't from, it's just the way things are going. We just adapted with the times, and these are the times, you know?
Yeah,
So,
man. And so, yeah, we just that's the thing with business. They're always going to we're always going to try to find a way to save a buck, right?
straight up.
So, and that's what's been happening for a while. Most companies said, well, shit, I can buy it for a fraction of the price from China. Why would I buy it
Yeah.
from here? You know what I'm saying? And you're trying to level the playing field and stuff, but do we have the infrastructure in place to start building all these things? Do we have these factories in place
You know
to start
what?
building all these things?
We don't know. I don't, possibly, but I will say this, man. There's this show called Warrior. It's on they put it on Netflix, but it was originally on some other show. But it's called Warrior, and the story behind it it's exactly like it is today. It's like it was based in like the 1800s, right? When they were bringing all the Chinese workforce over from China over here to build like the railroads up in San Francisco, and like all the people were pissed off. They're like, "Well, we want you guys to hire us. We're American, whatever it may be. We're Irish American." This is when everyone was coming over here, and it's the same thing. It's like we go through these phases, but we always figure it out, right? I mean, we're gonna figure it out. I mean, they always say, "Oh, well, like everyone, let's get the illegal immigrants out right now." I mean, they're building everything though, and it's for a cheaper cost. So I think we're gonna figure it out. I don't know what it's gonna look like. It may go through a recession or whatever to get there, but I think we'll figure it out. It's gonna be. I wrote in my notes today, going with the ups and downs. Business has ups and downs, you know.
Oh yeah.
We're gonna feel the effects of the tariffs probably here in the next few months. We'll start feeling it.
And that's one thing is like, well, maybe Trump will back off. The only thing I do know about Trump is he never admits he's ever made a mistake. He never admits he's wrong, and he don't backtrack on shit. So I don't think it's just that simple. He's gonna see the stock market crashing and say, oh, I made a mistake. I'm gonna get rid of these tariffs now. I don't think that's gonna happen.
I
I
don't.
think he wants to get to the negotiating table with these countries. That's his main goal.
I think so too, because I mean, if you look at it, they issued tariffs on us, right? I mean,
Now
it's
we
like
can
come
talk
up,
about that. We could talk
you
about
know.
that. It's not as simple. Did you watch? Did
Yeah,
you see that chart he brought out?
yeah,
We'll
I
talk
saw the
about that real
chart.
quick. And it
Yeah,
said, okay, Great Britain charges us 60% tariffs, so we're charging them
yeah,
30. Whatever other he named all the countries, and it looked like he's like, okay, we're only asking for half of what they are tariffing us. If you looked at that chart, if you
yeah.
dug into that chart,
Oh,
it wasn't that at all because it's a lot more complicated to say that okay, this country charges us this much percentage in tariffs, and then we're
yeah.
just going to charge them half because there's thousands of different things that are tariffed at different
Yeah.
percentages. To go through
Hmm.
all that stuff would have been very complicated to come up with a formula to say okay, we're going to tariff from this much.
Yeah.
So what they did, they just went on trade imbalances.
Hmm.
So let's say trade imbalance with China is 60%. We get 60% of it's probably higher than that.
Oh,
We get
yeah.
60% of our goods from China, so we're gonna put a 30% tariff. It was simple as that. It was just, we buy 60% more from them than they buy from us. It was just the trade imbalances, and he just chopped it in half. It was I don't know
Yeah.
who in his whatever administration told him to do it that way. So any trade
Yeah.
imbalance, he just said, okay, we're going to tariff you 30% here, 40% here, 20% here. It just went off of that. So it wasn't exactly a reciprocal tariff. They're high as hell tariffs, coming out of
Yeah.
nowhere, coming on a country you're not really tariffing, and all of a sudden putting a 40% tariff on them. That's a big hit, you know what I'm saying? Especially
Huge.
the companies here, are buying a lot of their parts to build the John Deere tractors or build whatever cars that they're making from other countries. And
Yeah.
now they're going to have to examine every piece of that car or John Deere tractor and see how much is it going to cost now. And, prices shot
Yeah.
up like 50% on this part, 60% on this part. It's just like it's
Yeah.
going to make everything more expensive.
Yeah. You gotta rerun your numbers. That's exactly what you're saying. Yeah. You're right. You're gonna have to rerun numbers, man. Especially in our field, like new builds. I'd be scared to touch them right now, as far as like even doing a new build or even buying one, just because of that simple fact. You know, you're really gonna have to run your numbers. You got to go with the ups and downs, man. It's gonna be interesting.
And now what I was thinking thinking out loud, okay, maybe he did wreck the economy with this announcement of these tariffs, right?
Mm-hmm.
And maybe this puts pressure on what's his name, the Fed chair Powell or whatever his name is, the head of the Federal Reserve, to lower interest rates. Now that would be great for real estate investors, right?
Yeah.
Not great for people with trying to put money in the bank and make some interest off their money, because if they start chopping, it sucks for them. But real estate investors would be a great deal.
For sure.
For sure.
If that happens, if that happens, for sure.
But what, I think it would be great. Here's the thing, in the short term. And I say that because remember last time the interest rates went all the way down to, 2%. It was doing, just dropping. Then what happened to house prices? They doubled and tripled because people could afford more house because the interest rate was so low. So that made 20, 30 people, 50 people trying to buy the same house, and it pushed the price way up, right?
Yeah.
And so so that's my thing too, is it's going to put even more pressure on housing prices if they do chop rates. So first of all, you're making housing prices higher because of the tariffs, and because it's going to affect the new builds, which is going to affect the older houses. And then if you start slashing the rates, that's going to make them go up even higher. So
yeah.
That's, and it is.
They say after every 1% interest rate cut is 1 million buyers on the market.
Man, so that's a lot more buyers, man. and so that's good for us that have houses. We're gonna try to pick up some right now before the smoke clears. But
straight up,
I just thinking of all these things that are gonna happen because of the tariffs. You know what I'm saying? It's not just the tariffs and that's it. Prices are higher. Now it's going to affect everything, and maybe interest rates too. We'll see about that. And then that might cause us to want to refi all of our houses, right? If we start getting super low interest rates again. Yeah. I don't know if they're going to go as low as they were, and the reason they kept dropping back then was it due to the housing crisis back then? Whenever housing plummeted, because I bought my house in 2009. And it was around 6.5%. That was pretty much normal back then. But then
I bought mine in 08. In 09, I'm sorry. I bought mine in 09 as well. Mm-hmm. And the reason why I remember mine was, I think interest rates are dropping at that point. And I could be wrong. Somebody can correct me. I think, what administration were we under? Obama?
That was Obama.
I think they were trying to reboot the housing market.
It was a bad shape.
They had a bunch of programs come out. Like they had the Kitty Condo program, they had NACA, a bunch of those programs, like housing programs, started coming out, and where people it was helping first-time home buyers, because at first they were just giving anybody a damn house, right? So they were like, look, let's create first-time home buyer programs where we'll help you with the down payment, but we have to make sure you have good credit and all that. And I think that's why I'm not sure if that's why, but I know those programs started coming out at that time, because I used one of those programs to buy my first house. Yeah. So
I got the $8,000. I remember I bought my house.
Yeah.
The Obama money. I got a check.
You get
the check for $8,000. Oh, this is sweet.
Yeah, I got the 10K check back. Yeah, I remember that. Yeah.
And then housing. I remember in that time when you got your, when the state sends you your taxes that you owe on the house. Mm-hmm. I remember every year it was dropping in value. Because I bought the house for, like I said, around 85 grand, right? Yeah. And the next year was like, it said, oh, your home value has dropped to 80 grand. Then it's dropped to 77 grand. For a few years, it was dropping in value. And I was like, man, people said, buy a house and it's going to go up in value. It's going to be your biggest investment and all that stuff. But I'm losing money on this damn thing. I was thinking that at the time. I was like, it's cool. I'm paying less taxes because the value keeps dropping. That's cool. But I thought these things are supposed to go up. But for a few years, like I said, remember, it was 2 years till we hit the actual bottom of the economy, And housing was still taking a while to recover because of all that crap they were doing. But I just remember, and I've never seen that again. I've never seen, I get that tax statement and my house value dropped. I ain't seen that since, man.
No, it ain't happening. It's just too much of a shortage. It just ain't happening right now. Like,
and you would think these schools are made of gold by now, all the money we're giving them.
For real. And then it's just a lot. Like whenever you have a new administration, a lot of stuff just changes, right? So even with the, shed some light. Like, and now we talked about this before the show. Even like with the firing like all these government employees, all that money. Whenever you start doing stuff like that, money goes private, right? You now have people bidding on government contracts, and that is a plus for us because like if they need housing for some things, like we secured 89K in reservations in 3 days off 3 doors. So yeah, off 3 doors, but 2 of them were from one company. And then this is in Arkansas. And then our third property that we secured, it was a $10,000 reservation for 1 month in Richardson.
Woo.
And yeah, I didn't get to know the gist of that one. It was crazy because I was sitting down with Mike because me and Mike, we have this house in Richardson together. And I was like, bro, man, like these government like agencies are booking houses through VRBO. And he was like, for real? And I was like sitting down with him, telling him about it. And I showed him the reservations. He was like, dang. Next day, he texted me $10,000 reservation for 1 month at the place in Richardson. It was crazy.
Wow, a government agency.
I don't know if that one was, but the other 2 were. Like, I know, it's crazy. So it's just like, it's one of those things. What they say, luck is when preparation meets opportunity.
Mm-hmm.
That's how it is. Like if you buy a house, like you said, you kept looking at that statement, your house is going down every year. But if you buy a house, wait a few years, it's a get rich long-term play. You know what I mean? And it pays off, man. Because right now, like I said, that house I bought for $35,000 that I put 35 into, I was selling it for 155. The appraisal came in low. It appraised at 147, but I got the house for free. And now I can sell it and get a duplex. You know what I'm saying? So we just have to keep on pushing on because, yeah, these the tariffs, the government workers that are being fired, it creates uncertainty for sure. But we'll figure it out. We'll figure it out.
I was going to ask you on the VRBO thing,
Okay.
VRBO, that so I don't get very many bookings from them. Mm-hmm. Most of the bookings is from Airbnb that aren't corporate,
Mm-hmm.
But so my thing is, and I know you use rule sets, correct, for your pricing
on Airbnb, yes.
Yeah, on Airbnb, and that's my thing. So and I run things through Hospitable. Who do you use?
Hostfully.
Okay.
Yeah.
So when you have your PMS or PMP, whatever you want to call it, the software you run all your properties on, do you set it to a certain median price? Well, Price Labs, you use Price Labs too, right?
Mm-hmm.
Sorry if we're getting too technical for some of the newbies, but
yeah.
So Price Labs is, let's say if you have one property, you want to put it on Price Labs because it's gonna price it, as accurately as possible. You set the parameters, but it's gonna price things, let's say a Taylor Swift concert is gonna come to town. I didn't catch it. All of a sudden, I'm renting a night out of one of my places for $100, which I could have been renting for $1,000. Price Labs will catch that, right? And so, excuse me. Anyways, it tracks all that. It's a pricing software, So we have that plugged into our Hospitable, right? Mm-hmm. Excuse me. And so I have my median price, and Hospitable always says, it wants to price it at, let's say, Airbnb is going to be priced at the price I'm putting in the calendar.
Mm-hmm.
VRBO is going to raise it 5% to 10% because VRBO takes more of our money, right? So it automatically adjusts it higher, the pricing in VRBO, right? And so I guess my question to you, does Hostfully do that as well? They price VRBO higher than they do the Airbnb price?
Yeah, you can actually set the multiplier. This is why I'm happy they booked the VRBO because I charge 25% extra on top of what the Airbnb price is. So they paid the 25%. Reason why I like VRBO because that type of customer on VRBO will pay that. So yeah, they paid the 25% extra. The 25% actually ended up being, so for one of the reservations, I'm looking at it now, it ended up being $9,386.80. That was the rate multiplier is what they call it. So I charged them $37,000 and then we got an extra $9,000 because it's 25% higher. So yeah, I definitely use that. Like on Marriott Homes and Villas, I think I charge 40% extra. And I think on booking.com, I charge 40% as well.
Okay. Put a bow on that. I want to go back to booking.com because we've been away from it for a while. But anyways,
go ahead.
Back to my second end of that VRBO question.
Okay.
Now, I know inside of Airbnb, you can set them rule sets, right? You can say if they book one night, it's going to be, let's just say for easy numbers, it'll be $100 for one night at whatever cheap 1-bedroom place. If they book 2 nights, they get like a 10% discount, right? It'll be $90 if they get a night. If they book 3 nights, it'll be $70 a night. So the goal in doing rule sets is to set these parameters where the longer they book, the bigger discount they'll get. But you're still making money because you raise the prices higher than they're supposed to. It's old business thing right there.
Yeah.
A pricing thing. And so, but there's not a way to do that in VRBO unless they've changed something. Is there a way to put rule sets in VRBO?
I don't see them in VRBO. I'm gonna be honest with you. I don't log into VRBO. I only look at I only use Hostfully.
Sucks. The site sucks.
Well, yeah, that's honestly why it's better to just use a PMP if you're using VRBO because I seriously just use Hostfully and I have everything in there and I just tell Hostfully. So basically, PriceLab send the prices over to Hostfully and Hostfully says, "Hey, on VRBO, raise the price." I don't have rule sets on VRBO to answer your question.
So to me, I know the reason we hardly ever get bookings through VRBO is because it's so much cheaper in Airbnb. Because, well, first of all, you're raising yours 25% in VRBO, so that makes it 25% right off the bat. But if you book a whole month in Airbnb with that, you're getting the discounts from the rule sets, it might come out to $3,000 for that month, whereas VRBO is not going to give any discounts. It's going to be like $6,000. So it's going to be like a big difference.
Well, the difference is the type of guest that's on VRBO isn't on Airbnb. It's an older demographic. So they're willing to pay that $6,000 over the $3,000 because they think they're getting value, even though the same property's sitting on Airbnb. Yeah. And it's a younger person on Airbnb usually, from what I've noticed. Because even we had a guy book for like $8,000 for a month. He came from Tennessee. He was an older dude. And he was like, man, I like VRBO and that type of aesthetic property that was there. It's a 3-bed, 2-bath. I think they see more of that on VRBO instead of on Airbnb. You got to kind of search for a 3-bed, 2-bath for my family. You know what I mean? And on VRBO, they just expect it to be there.
Maybe a lot of it is the VRBO makes some pretty damn good commercials, right?
That too. Yeah, that too.
So if people, like you said, the older demographic are thinking, man, I'm gonna stay away from Airbnb because I don't want to be, showering next to some stranger or something because that's what the commercials make you think, right?
Yeah.
But I always laugh at the commercials because it's like, okay, every property that's on VRBO is on Airbnb as well. But people don't know that from the commercials. They think all the Airbnbs are shared properties.
Funny thing you say that. Like, have you seen the VRBO commercial with Nick Saban?
Oh, those are hilarious.
Yeah, where they're basically ragging Airbnb the whole time. Like, yeah, I'm gonna be in your house telling you what you can and can't do. They do make way better commercials. They just do. So it's like, but look at who's on there. Nick Saban, the older guy who's preaching it to people that are gonna look up. Oh, it's Nick Saban. He ain't staying in no Airbnb. He ain't staying in what. You know what I mean?
Now, in reality, I'd love to rent a place with Nick Saban, man. I'd be having some great conversation with him all day. Hey, honey, I'm gonna be downstairs with Nick talking football, man. I'll see you later.
Straight up. But that's funny. Like, you're right. They make these like jabs at Airbnb on these commercials, and it works. You know what I mean? It works. So yeah.
It works, but I always laugh because man, every damn property that's on VRBO is also on Airbnb,
It's the same experience.
Maybe 99% of them. Maybe there's some that aren't, which if you're a good host, you better be on everything, right?
Yeah. I'm pretty sure, I have seen, remember we used to be on the BiggerPockets forums? I remember there was a guy, I forgot this dude's name. We talked about him before, but he basically gets all his reservations on VRBO, but he's like in South Carolina somewhere. And he gets all these reservations. He makes a lot of money on VRBO, but I'm not sure if he still does because I don't know. I really don't know the market of VRBO through the pandemic if it was doing the same thing as Airbnb. So I don't really understand that.
That would be an interesting thing. I might even consider doing an exclusive VRBO property and seeing how that hits. I'm just to consider it.
If you do it, make sure it's like a 3-bed, 2-bath, 2-car garage, more upscale property. Because the apartments, they ain't hitting on VRBO.
Okay. That's what I was just gonna throw 1-bedroom on there to see what's up. But okay,
that ain't gonna fly.
But then I'm not gonna throw one of my 3 bedrooms. Here's the reason why I wouldn't do that. Make it exclusive to VRBO is because I get a lot of corporate people booking through Airbnb for someone else on Airbnb. You know what I'm saying? That's a big thing now.
That is starting to be a big thing. I'm happy you brought that up because like I've been linking up with like, and what I do is I get on, like I tell you about LinkedIn, like I'm networked in with HomeLink because they're real big on there. HomeLink is like probably one of the biggest ones on there right now. And I'm linked up with them and I they'll reserve for somebody for like 3 or 4, like for 30 days all day on Airbnb. It's definitely changing. Airbnb knows, I think we talked about it. Airbnb knew they were losing money, right? We're losing money on these corporate people. We got to find a way to get them on Airbnb and make it easy for their insurance clients because the insurance clients are hit because, especially now they have like the third party where the insurance person talks to you and then the person who's like under the insurance can actually see the person who's going to be staying there can see the conversation as well. So they did a good job with that. Airbnb did a good job with that.
Yeah, they saw that. They saw what was going on. They'd be like, "Hey, how come this guy's calendar is blocked like 3 months every year, 6 months every year?"
Straight up. I mean, you know what's going on.
And that's the thing. I get hit up with a lot of newbies, right? Mm-hmm. And they're always asking me, "Hey, we either like the podcast or we saw you had this property over here. They're asking about it." And I'll engage with some of them and just give them some advice. You know what I'm saying? Yeah. And then, but a lot of them are like all about AirDNA. And they're like, well, I'll say, okay, well, here's a property, I think it'd make good money for you, this and that, or whatever. If I become, friendly with one of these young whippersnappers, if I see that they're really hungry to do something in this industry, I'll partner with them and stuff. I'll help them out. But and they're running AirDNA says only made this much. Here's the comparables. It shows me all these houses. And if you look at the AirDNA stuff, let's say these houses, a lot of them are only bookable for like 130 days out of the year or 200. It's only showing you Airbnb data, right? Or short-term rental data. And I'm like, okay, this house is beautiful. This house is gorgeous. There's no way it's only making $20,000 a year. I guarantee you the rest of that calendar that's not bookable is corporate rentals. I bet they rented mostly on corporate rentals, which doesn't show up in the data. So this beautiful 4-bedroom, 4-bedroom, 3-bath house, with impeccable furniture, is not making 20 grand. I know your AirDNA data is showing you that, and they're kind of like slaves to this data. I'm like, no, this data ain't accurate, man.
It ain't. And I'm happy you went on. I've been said that data ain't accurate because you have to look at. They can't determine nights off a closed calendar, right? Mm-hmm. So I mean, what data are you pulling? Okay, this is the only time I would listen to AirDNA. I would only listen to AirDNA in vacation rental markets because I think that's where a majority of its data is more accurate. And someone in a vacation rental market can correct me if I'm wrong, but I think that's where the majority of their data is more accurate because they're dependent upon like the vacation Airbnb people coming in, like Smoky Mountains. I would use AirDNA. Joshua Tree, California, I would use AirDNA. But always, and also remember this, like with the pandemic hit, right? There's certain factors AirDNA can't factor in. So was it past results can't predict future? No, past data can't predict. Can't predict future results, right? It's AirDNA. I mean, and I was running I did an Airbnb room for my mentor last night, and I just talked about Airbnb stuff, and I told him straight up, you guys can't. If you depend upon Airbnb, you're limiting yourself because you're not putting yourself out there. You can't get midterm rentals. But there was actually a thing about midterm rentals this guy brought to my attention that I never thought about. He's this high W-2 earner, right? And he wants Airbnb because of the tax loophole. So you get the tax loophole, you get the big tax break, right? You can deduct from your W-2 because you're working 100 hours, you get the real estate professional. Mm-hmm. He goes, but when he talked to his CPA told him, you can't go over 30 days on a rental because it excludes you from being
tax professional, real estate professional.
Yeah, because it has to be an average of 7 days, which I didn't know that. And I was like, oh, damn, I didn't know that. So the people who do get into it, you may want to have get multiple properties, have one that's straight up short term or whatever, and then the others be midterm. But yeah, you can't just have midterm. I didn't know that. He schooled me on that one. I was like, oh, damn, for real? So yeah, I didn't peep that out.
Yeah, you gotta watch that. That brings us around full circle back to the booking.com thing. Now, We've stopped using Booking.com a long time ago because of all the fraudsters on there, right?
Yeah.
A lot of fraudsters, scammers, chargebacks, all that crap. So what brought you when did you go back to Booking.com and why did you go back there? And how are you making it successful for you?
I haven't got a reservation on Booking in a long time, but what makes it successful is make sure they're over the payment processing and it's not on you. If it's on you, then that's when you get the chargebacks. If you, go to BDC Payments, make sure turn it into like Airbnb, how they do their payouts. Booking.com will do that as well.
They did okay because in the past they didn't do that, right?
Yeah. If they
so now they do it.
Yeah, Booking. You need to make sure Booking.com is a merchant on file.
BDC payouts.
Yeah.
Okay.
If it's you, then you start getting those chargebacks and stuff.
So if it hasn't gotten you any bookings, what's the point of being there?
I just have it. I'm everywhere. Meaning, for example, if my calendar was just open, I would get a booking because I had one. I did get a couple. If my calendar's just open, but my calendar usually ain't open because we're doing midterms, right? So if it's just like open, I'll usually get a booking.com here and there. But I just always have it listed everywhere. Yeah. Okay. And then I'm real big on having the Airbnb thing in there. I get a lot of calls now. They call my Google Voice number. We answer. And like we just had a basketball team call us 2 days ago. They were going to have some basketball guys come down and be working out for the summer. So we're going to see if they book. They want to book May 1st through the end of June. So, having that set up, man, just having everything set up so people can call you directly is huge.
Nice. Now, Zillow applications. Do you send people Zillow applications?
No, I do everything through a veil.
Okay.
Yeah. I do it through a veil.
But are your homes on Zillow?
I need to double check that. Let me write that down to give my VA to double check that. I haven't been on there. No, you know what? They are, but we kind of we turned it off because every time somebody would call, they'd be just like, "Are you serious? This property's really this much a month?" I'm like, and it'd be like daily. So I'm like, bro, these people not read. They ain't gonna read it. They just look at pictures and call. So
I'll tell you to get back on there. I'll say we're getting a lot. That's where we get most of our corporate hits is from Zillow.
Okay, I think it works here. I'm gonna have Mike do our one in Richardson, and over there, nah, they just keep calling just to complain. Like seriously. So I'm gonna try it though. I might get back on it just to see what I can get.
Okay, and the reason, I mean, like I said, all of our homes are on Zillow, and a lot of our condos too. But like apartments, I think you can't put apartments on there because then it's gonna ask you if you own the building kind of thing.
Yeah, all that crap.
Yeah, you get hung up on that, especially if the apartments are already on there. You know what I'm saying?
Yeah.
So I'm sure there's a workaround. You could put like an address down the road from there or something.
Oh, you can put apartments on there. It's just
sometimes it gives you issues. Sometimes
it gives you issues, but it's just like sometimes it does. I haven't done an apartment since last year. I got out of the apartment, so I haven't done it.
Oh, how did that work? How did you get rid of all your apartments?
Man, I just got rid of them. I just let the leases expire and went somewhere else. I was like, man, let me go to. I'm doing all houses now.
So what'd you do with all that furniture?
Sold most of it. I have one set of furniture in my garage that I'm gonna sell once the summertime hits, so I can do a garage sale. And then some of it I might put in this new duplex if we get it. So we'll see how that goes, man. Because you got to go with the ups and downs, like I said, man. Because now I got a $10,000 plumbing fix to fix. So,
ooh, what house is that?
The one that I did my last BRRRR. So what happened was the plumbing lines were jacked. I tried to take a shortcut. Don't ever take shortcuts on your rehabs. And whatever your damn hard money lender says needs to be fixed, believe them. Sometimes, but most of the time, believe them. So I have a $10K plumbing fix, so you're gonna have to rerun it. But the city is giving me like a $2,000 because the city's trying to revamp this area that I invested in. So they're giving us like a $2,000 rebate to get the plumbing fixed because some of it leads out into the city. So I was like, I'll take the $2,000 rebate. That ain't bad.
It's not bad. That's pretty good. And is that Arkansas?
Yeah, that's in Arkansas.
Okay. Yeah, I definitely get the what is it called? The scopes. I pay extra for when I do
Always.
the inspections on a house.
Yeah.
So I've had several buddies that they find out something after the fact. They just get the regular schmegular inspection, right?
Yep.
And then after the fact, they
run that camera, bro.
Yeah, the camera, the infrared. I said, I want it all, man. I know
straight up.
It costs me $200 or $300. I don't care. I'll pay for it because I know though to fix it, it's gonna be 8,000 or more. So a couple $100 will save you from that shit.
For real, straight up, man. That's why I kept saying, got to roll with the ups and downs, bro. That's gonna be the name of this episode.
So you didn't exactly. So you didn't notice that plumbing issue before you bought the house.
No. So I looked at the guy because the guy was like, "Oh, well, this plumbing thing," and I didn't believe him. And I had my guy go out there, my rehab guy. He went out there, and of course he Jimmy rigged it. So I don't do that. So that was on me. I have to take that. That's a $10K loss on me. A $10K learning lesson. Yeah. So I'm like, I ain't tripping. As soon as you get the $89,000 in reservations, a $10K expense hit. So it's like, gotta roll with the ups and downs. So but I'm not tripping because once I do this one, I could 1031 this property has enough equity in it. I could 1031 and get another duplex. I'm very much considering 1031 in all my single family houses and getting duplexes and fourplexes and triplexes.
Yeah, man. Like we mentioned on the last episode, it works for what we do.
Perfect.
Short-term and corporate. It works for that. People don't mind living in the same, house with the wall between it. If they're going to be there for just a short period of time, right?
Right, straight up, man.
Now, forever homes is a different story. People probably don't want a forever home to be a duplex or triplex or whatever. But maybe some people don't mind it. But for what we do, to maximize the dollar, I think duplexes and triplexes is a good play.
Heck yeah. I'm seeing this funny. Remember in last episode, we were talking about the triplex versus the duplex. We decided to, go with the duplex because our appraisal came back low, so we ain't going to get as much money. But I was like, there's 3-2 on each side. I'm like, I'll go with the duplex. And then my realtor, she was like, yeah, the triplex ain't just the best area. Because I think we've talked about it before, too. Like, once you start getting into triplexes, it's a different demographic over there. So, for real.
Hey, you can buy your crack, your weed, and prostitute in the same building. That's
straight up, man. Once you start getting in those bigger neighborhood, straight up, man.
Just know the knock.
Straight up. For real, dog. It's like, yeah.
Oh, man. So, go ahead.
No, I was like, yeah. So you just got to roll with the ups and downs. So, yeah, hopefully if we can get this duplex, man, that we can try to get another one. 1031 everything, go to multifamily.
Do you believe in diversification?
Of your real estate portfolio?
Of your entire portfolio.
Oh yeah, for sure.
And that's something, going back to the tariffs and everybody's 401ks tanking, right? And people are freaking out. Is we're diversified. We got 401ks, right? We got some stocks over here. I got a little Bitcoin. I got different stuff. And I got real estate.
Yeah.
And so, okay, maybe my stocks are dropping, but my real estate's going up. That's what it helps when you're diversified.
Straight up. I've been going hard on crypto. I've been buying up XRP like crazy. I was like, let me go ahead and it's tanking. Let me buy it now. So I've been going crazy on crypto, stocks, index funds. Those kind of dropped on us. But you know what I'm saying? So play the long game. Diversify your portfolio for straight up. But most of my portfolio is real estate though.
Now, do you use Robinhood?
I have like $800 in Robinhood. I stopped using it. I switched over to Coinbase.
Oh, okay.
Yeah.
For the coin stuff. But what about stock stuff? What do you use?
Stock stuff? I use my IRA through Merrill Edge. I use them. Yeah, my stocks and index funds.
Oh, okay. So you don't even buy individual stocks mostly? Or
yeah,
really.
I do. Right now.
Inside your 401k, you buy individual stocks?
Yeah. Inside my 401k and inside my IRA.
Oh, okay.
Yeah.
Because I've been using Robinhood for the individual stock stuff.
Really? Yeah, I was using them for a while, and then I got away from it and I've been using Coinbase as of late. Yeah,
okay, but Coinbase, you can only buy coins, right?
Yeah, Coinbase is only crypto. Yeah, my stocks is all in my 401k and my IRA. Yeah, and then I have my kids, their 529s and their CMA edges. I buy stocks for them as well.
Okay, and so That's a question I was gonna ask you. And so could you explain the things that you have for your kids? The 529, what are those?
The 529 is the college plan. So that's the one they have to use those funds to go to college or you have to pay taxes on it. The other one is, I think, is the UGMA. I don't really know. Basically, that you can give them those funds. Somebody correct me if I'm wrong, and I might be wrong on this, but you can give them those funds at the age of 18, but they don't have to use it for college. They can use it for other things. So you have one that's strictly college, one is for other stuff.
Mm-hmm.
Me personally, I bought my kids houses before they were 3. So one of them, the one that I'm selling, that's one of their houses. So I was like, I'll sell that one and then get a bigger unit. So then, they could still have money going to college or whatnot. But yeah, so real estate for my kids, I have real estate 529s and UGMA custodial accounts. Yeah. And I just put like $40 in them every pay period. So like $20 a week.
Okay. Yeah. Okay. Yeah. That's what I was, because, when we started getting into our investing career, right? As far as real estate, we were both, I think, heavy on BiggerPockets.
Yeah.
And it always stood out to me what Brandon Turner said about, his college fund for his daughter is buying this. It was either a duplex or triplex. It was one of the two that he bought. Like, and I'm gonna put it on an 18-year note.
15 year.
Oh, was it 15 year? Okay, whatever it was, whenever she was due to graduate, right?
Yeah.
He timed it where she was going to graduate. This thing was going to be paid off, right?
Yep.
And so that was her college fund house. And I was like, that's pretty freaking clever, man. Instead of doing one of these things tied to the stock market or whatever, you're buying this house, going to be completely paid off. And in the future, it's going to be worth, I don't know, 500 or 600K or more, depending on, that's a long ways away. Who knows how much it's going to be worth. But I was like, using the house as a college fund is freaking genius.
Straight up.
And so you did that, but you still believe in those other plans as well.
Yeah, I still believe in them all. Like, cause basically because I had 2 houses on 15-year notes, but they're on 3% interest rate. So I was winning all day with that. But this one, it's a 3-bed, 1-bath. So I had the 1031 it. But yeah, if you could diversify like the future for your kids in those 3 areas, you winning. Yeah, you're winning.
And then that's the thing too, because like, in a lot of these accounts, I'm like, should I just be heavy on real estate and that will be the college funds for them? And then here's the other thing. Like you said, that 529 or whatever. Let's say your kid decides, Dad, I want to do the real estate thing like you. I don't want to go to college. It's gonna cost a lot of money. And I don't really passionate about it, and it's gonna be 4, 6, 8 years of college for something, and then I'm gonna be, and then I might not even like that profession. Whereas if I start doing real estate with you right now, I'm gonna be a millionaire in a few years and not pay all this money for college, and that's a valid thought, because for a while, since we've been doing this podcast, we've been kind of anti-college from seeing what everybody's been going through with these student loans and then these careers.
My
that ain't paying out.
perspective's changed.
Has it really?
My perspective's changed big time, man. I've been the last year. Last year I was off the podcast, but I started really networking with like other individuals and other cultures and how they do things. And there was something I really liked that stood out to me. Like, let's use the Nigerian, Indian, Ghanaian, African, Indian culture, right? When they come to America, right? What's the first thing that they're real big on? It's education.
Education, yeah.
So the first thing their parents tell them from jump, hey, you're going to be a doctor, lawyer, or engineer.
Yeah.
Those are the only 3, right? So if you look at it, us as Americans, we're like, nah, that ain't for us. That ain't for us. But who has all the wealth in America? Those 3. They're getting doctors, lawyers, engineers. Then they go start a business. We're coming from the fact of, start the business. But if the business fails, what's your backbone? So I'm kind of taking on that role of, I'm telling my kids straight up, if y'all going to college, y'all going to be a doctor, lawyer, engineer. Straight up. That's all I'm paying for. So I'm doing the 529 for that reason. And then if you want to be a real estate investor, cool. I can teach you everything on how to do it, but you need to be able to execute that. Execute your passion on a full stomach is what I'm saying. Know how to feed yourself, then go execute what you want to do. Because that's what I did, and that's what made me who I am. I don't want them to bypass all that, the hard work and trying to do it. I'm not against it, so I'm kind of changed on that. I'm kind of like, yeah, go to school, but I'm only giving you three paths, straight up.
Okay. And I've also heard another thing. If you're big, and and if you look at it, all the rich families they make their kids go to college, right? All the rich families,
Right up.
their kids go to college. They don't just give them whatever. Maybe some of them spoil them, but anyways, so what I was thinking, and it just fell out of my head. So,
Oh,
so the college route. Um, okay, here's another argument.
okay.
And I've heard the bigger pockets guys talk about, or the Brandons and people talk about it. Should you pay 100% for your kids' college, or make them, responsible to pay their own college and get grants and loans and or whatever? And that's, I mean, on paper it says no. I mean, I'm saving up so I could pay for them to go to college. And then the argument against it is like, man, they're not going to value any of that. They're just gonna, I'm gonna go to college. My parents are gonna pick up the bill. I don't have to work. I don't have to do nothing. I just have to go to class if I want to. You know what I'm saying? Whereas, okay, you're gonna go to college, but you're responsible for this. You're gonna find a way to get through it with your money. You're gonna have to work. You're gonna have to get through it. Yeah,
No good.
that's just another argument. Should I just give them all? Here, I'll pay all your college. You gotta do shit. Just go to classes.
Yeah, I ain't doing it that way. I'll do this. You go to school, get the student loans, right? And then I'll just pay off the student loans when you're done. They won't need to know that. You don't need to tell them everything, right?
Listen to this podcast.
Yeah, yeah, exactly. But you know what I'm saying? You don't need to tell them everything. Like, my kids don't know they have a house. They don't know. I mean, I ain't gonna risk tell them, but I mean, I'm pretty sure Malachi's probably heard it in conversation of why we have some of the houses we have. Because I've been teaching him like financial literacy games. By the way, this is really good financial jumpstart for your kids. Like, I've been teaching him about interest rates, stuff like that. So he's starting to learn it now, but I also want him to make good grades in school, which he does. But, like, I wouldn't just give him the money. Like, nah, go to college, figure it out, find out what you want to be, get in some debt, and then I'll pay it off at the end, possibly, or whatever. We'll work it out. But yeah, I agree with that. Yeah, don't just, hey, here's 100,000, go to college. Hell no. Straight up.
Yeah, that when I heard that, I was like, that's a good argument for not, we always thought, yeah, we're gonna grind it out so our kids don't have to pay for college.
Mm-hmm.
And then what the argument against that was like, well, it breeds like complacency. It's like it doesn't paint them a picture of what the real world is. Okay, I had all my life paid for. I didn't have to do nothing. I had my 4 years or 6 years, whatever it is, of college paid for. I didn't have to pay a dime on it. And now I'm in the real world. Somebody give me a job and take care of me. You know what I'm saying? It's like it gives them like that's not what the real world is or should be.
See, and I don't think the real world is us just like on the other plan, the UGMA custodial account. I don't think the real world is also just giving them cash to go start a business either. So it's like, you got to, my mentor always says, the things that you went through are what made you you. Don't shield your kids from them. Yeah. And I agree with that. The hard shit that you went through is what made you you. Don't shield your kids from it.
Mm-hmm.
We try to shield our kids from trauma. They're going to have some sort of trauma. Something's going to be effective. You can't shield them from it. If you try to shield them from it, you got to go through life. We got to go through the ups and downs. Yeah. So
I dig that.
Yeah.
I dig that. Yeah, man.
Yeah.
Conversations here. But yeah, the whole thing with college, that was I guess it's funny because when we were diving into this whole, real estate journey, learning everything we could, listening to the podcast and stuff, there was a big push against college.
Yeah.
It was a big, because all these people were having this hundreds of thousands of dollars in debt. And I just gotta, I'm on, who Dr. Rachel is? She's a STR. She's big in the STR world.
Yeah. She's been on the podcast.
Oh, snap. She has. That's right. We've had a lot of episodes. Yeah. But one of her last posts she said, the W-2 tax shields that eliminated my $500,000 debt. So she became a doctor, right?
Mm-hmm.
$500,000 in debt, student loan debt. That's unfathomable.
So let's say you got $500K in student loan debt and you're a doctor, right? Think about how fast you could invest your salary to not only pay that back, but to build generational wealth. That's what we don't talk about.
Mm-hmm.
That is why when people come over here from other countries, they get educated. I'll be honest with you. So I lead the meetup group for real estate investment group here in Texas. And I lead it from my mentor, the part that's based out of Dallas. Most of these people, man, they're first generation Americans. And they went the college route. Now they're investing in real estate, man. I'm for real. Like the engineers, the doctors, the lawyer, they're investing, man. And they can do it faster because they have 200. Mostly people make $250,000 a year on W-2, 250,000. So they got to do it for tax purposes. You know what I'm saying? They getting taxed out the what on W-2. So I see both sides of it.
Yeah, it was a great article. I'll forward it to you.
Yeah,
she said that coming out of college, she had $500,000 of student loan debt, right? Completely burned out, from the long ass college. Fresh out of residency in 2008, her household brought in $7,000 a month. The student loan payments kicked in at $5,000 a month. $500,000 a month. That's according to this article.
I could see that.
Or a $500,000 debt.
Yeah, I could see that at that time because this isn't like, now you can there's so many programs to lower your student loans. You can lower that boys to $20, but yeah, I could see it at that time. Yeah, that could be a problem.
So what happened? That's what got her into real estate. The first property it added $5,500 a month to their monthly income without requiring extra shifts and all that. So that that's what she's preaching, the power of real estate. So she was able to get a rental property to pay that student loan debt for her.
And you know what else is the power of that? I'm gonna tell you something else too. That right there makes you a hustler. When you got a $5,000 to pay, that makes you a hustler, man. You're gonna have to figure it out. Straight up. You gotta be like, okay, how do I figure this out? Funny thing is, I did it the other day. I was like, so I got my EIDL loan, and that's been like $1,800 a month I gotta pay, but it's making me, hey, go get better units, level up. So sometimes that can kick you in the ass and set a little fire,
What's the EIDL?
That was when the COVID hit, the COVID EIDL from the SBA. They were giving you.
Oh yeah.
Yeah. So I took that, and so you got to pay it back. You got to be on your hustle, be on your grind. You can't quit. I love that about it. It does, because whenever you're under pressure, that's when your mind really gets to thinking and figuring things out.
No, big time, dude. Pressure creates diamonds, right?
Yes, sir. Pressure creates diamonds.
Well, cool, man. We've been about an hour on this one, so we always have a great time chatting about this stuff with you. Let me see. Yeah, anything else on your mind you want to get off real quick before?
That is it, man. We're gonna have another good episode next week. This has been fun, man. It's back to back episodes. It's been a while, so yeah, man. That's it for me. And
start getting some good guests on here again too, like back in the day.
Oh yeah, for sure. I got some coming. I got a few heavy hitters coming. So yeah,
maybe your mentor can hop on.
I'm gonna see if I can get him. I gotta keep doing the Airbnb rooms for him, and I'll see if we can get him on.
He would blow everybody's mind, I'm sure.
Yeah,
he's a legend. Was it Thatch, right? Thatch.
Yeah, Thatch Win.
I love listening to him talk. He's a bad dude.
Hell yeah.
Where can people find us, Myka?
Find us on liveletthrive.com, email us, and then you can find us on Instagram, TikTok, all that good stuff at Live Let Thrive. We're always posting content. So follow us, leave a comment, share, all that good stuff, and we will see you on the other side.
Go Mavericks.
Go Lakers.
Peace.
Later.
Thank you for tuning in to this week's episode of Live, Let, Thrive. Be sure to tune in next week for all the latest in the world of Airbnb and all that entails. Bye-bye.